In the spirit of our Independence Day today, we're going to be discussing how I plan to keep my financial freedom of over $300,000 per year in dividends from Yieldmax, even during bear markets and after dividend cuts. So Yieldmax, Cornerstone, and Defiance help us earn, again, over $300,000 per year in dividends, as you can see below, and they help us live the FIRE lifestyle, which means financially independent, retire early. If you need help living free from a 9-to-5, email me for my e-guides at akintodd48@gmail.com. You can also see that we're outperforming the markets. We're up 25% for the year, and the S&P's up 15, the Nasdaq's up 19, the Dow's up 3, and the Russell's up 1. So we're beating all of the indexes with Cornerstone, Yieldmax, and Defiance. Many say that this can't be done because they think that even though they have really high dividends, that they just go sideways to down and erode or show you NAV decay. But you can see that we're up 25% for the year, and this is not from trading because banks don't accept trading for loans. They only accept dividends or pay stubs. So that's how I live the FIRE lifestyle. And so we need dividends to qualify for more loans to banks, not only to level up our accounts, but to get a house loan or a car loan. So in order to live free from 9-to-5, you have to have dividends. And that's where all of my outperformance is coming from, is from dividends and margin. For every $1 you put in your account, you get $4 of purchasing power. And I'm just using a fraction of this purchasing power to get ahead. This $233,000 in margin debt, we were at around $250,000, but we just received our Defiance dividends of around $12,000. We also got our Cornerstone dividends this month, so we've knocked our margin debt down significantly. And my interest wasn't a problem anyway because you can negotiate your margin interest down. I've done it twice. Many of my clients who bought my e-guides did the same thing. When you buy my e-guides, you get free access to Discord for life, and you get my phone number for life. So just keep this in mind. So I'm not worried about my margin interest, and I'm not worried about my margin leverage because my dividends of over $300,000 per year pay back my margin leverage in less than 1 year. So even with my bills of around $50,000 to $60,000 per year, my dividends, again, pay back my margin in less than a year. I can travel the world. I can do whatever I want with this margin debt. All the greats that I know have used debt to get ahead. So you can use margin for anything. You can buy a house with it, cars with it, clothes, shoes, whatever you want. I swipe my E-Trade card and go wherever I want in this world, even in debt. The key is low maintenance. And we'll go ahead and get to the first point of the video now, and I'll just go ahead and say that whenever my dividends fall, my dividends fell to around $285,000. So how did I get them back up while keeping my margin debt the same? Actually, my margin debt has fallen again because I received these dividends. How did I get my income up though while keeping my margin debt down? The first thing was not only did I buy more dividends, I bought more Defiance funds on the dip, but I also bought low maintenance names. So QQQY is 30% maintenance, as you can see here, and it has a 70% dividend. So the Nasdaq has had a nice run over the last few days. I mean, the last year it's had a great run. And QQQY has moved up some, but I had to buy more of it because we had the dividend cut. The Nasdaq still looks cheap when you look at the growth metrics of, let's say, an NVIDIA with AI and all the synergies with all these other Nasdaq companies that are going through this fifth industrial revolution. Tech seems cheap even still after the latest run. And so I bought more QQY because the maintenance is lower, 30%, versus Yieldmax, which is 50%. So YMAG, once again, Yieldmax is one of my favorite Yieldmax funds. It is 50% maintenance. So the key to keeping my income the same while keeping my available withdrawal high, okay, while keeping my available withdrawal at over $320,000 is because I bought low maintenance names like Defiance, and Yieldmax is 50% maintenance, Defiance is 30% maintenance. If you need help understanding maintenance, that's in my volume 3 e-guide. So low maintenance is the key to living the FIRE lifestyle. If I ever increase my dividends by buying more on margin, which is very simple, I can use this 1.4 million in purchasing power to buy whatever I want, whenever I want. I can increase my dividends whenever I want, but the key is doing it safely with low maintenance names that keeps your available withdrawal high. We can withstand over 30% corrections in the market and still withdraw freely out of our account. So that's how we live the FIRE lifestyle. With our margin, we buy low maintenance names, once again, like QQQY, that have really high dividends and it's indexed. So I don't mind risking my margin with the indexes, which we'll get into a little bit later in this video. So that's the first way that I maintain my $300,000 in dividends, even after a recent dividend cut or during a bear market. I just simply buy more on margin, and then I buy low maintenance names so that my available withdrawal stays high. And that way I can still withstand over 30% corrections and withdraw freely out of my account to pay my bills and live free from a 9 to 5. As each month goes by, I can afford to buy more dividend funds on margin because I pay down my margin by about $25,000 a month. Then I have $5,000 in bills, so I pay down my margin by about $20,000 a month. So I can still add $10,000 to any given fund, for example, and then raise my income that way. When the bear market ends and higher prices return for Yieldmax, those dividend yields will go back up again. So I got to buy a lot of shares at the lows. And then when the eventual uptrend resumes, we get our day's gains from capital gains with Yieldmax, and we get higher dividends because as the volatility rises, the premiums will rise. The second thing that I do to keep my income high and my margin debt low during bear markets, because we don't want to just keep increasing our debt during bear markets and adding to our margin interest unnecessarily, so I sell put options to lower my debt even further. So in addition to my dividends helping to pay down my debt each month because they're quite substantial, even what I have to pay in bills, I still clear plenty in dividends to pay down my margin debt and spend and do whatever I want with each month. I also sell these options to pay down my margin debt. So BitX, for example, that's Bitcoin. This is how I'm playing Bitcoin. I'm playing it with much less risk than everyone else, in my opinion, because while everyone's controlling Bitcoin at around 30 or 40 or 50 BITX, we're controlling it in the teens. If you take the $50 strike price and minus the $3,100 in premiums, you get a cost basis of around the high teens. So we're controlling BitX once again in the teens, whereas everyone else is controlling it at much higher prices, and we lower our margin by $25,000 in the process. If you need help selling options like I do to lower my margin, that's in my volume 6 e-guide. The third way I'm going to keep my income the same during bear markets is, yes, Yieldmax dividends could fall, but Defiance dividends should grow. So Defiance sells puts just like I sell puts, and I like to sell puts when prices fall. That way I get higher premiums again, because when stock prices fall, their options get more expensive on the put side, so I sell those options and get more premiums in the process. So I'm sure if Defiance is selling put options, they're going to be able to increase their income as well. And I've documented this in past videos where we had a down month in the market and Defiance dividends actually grew. So we don't know if this is going to hold true in the next bear market, but Yieldmax dividends should fall in a perfect world, because as stock prices fall, the call options are worth less. They're going to get less premiums. But if you sell puts like Defiance does, then when the market falls, put premiums should rise. Also, Cornerstone will continue to pay their dividend no matter what. Cornerstone is a 4-star fund, as you can see here, and it moves upward, left to right on its chart, as you can see below. Cornerstone, as you can see on its chart, it goes sideways to down over the last 10 years. But if you play it properly and time it between its rights offerings, you get 20% premiums that it averages per year on top of the 20% dividend, and it keeps its dividend at 20% every year. So yes, Cornerstone's dividend's at around 15% right now because the stock price has moved up, but it sets its dividend at 21% every year at its NAV, and it keeps it there. So even in a bear market, you'll see Cornerstone dividends stay the same again until the next year. Sometimes they raise their dividends in the following year, but most years they cut their dividends, and the way to keep your 21% dividend in Cornerstone is again by playing the rights offering properly, and that's in my volume 4 e-guide if you need help playing Cornerstone. When you buy my e-guides, you get free access to Discord for life, where we alert you of the Cornerstone rights offering announcement here on this channel. So we have over 1,000 members here pursuing the FIRE lifestyle. We're always putting our heads together, trying to make the best decisions possible in the market, but we're all watching for this rights offering announcement as well. So we all know that this is the key to getting ahead. Okay, it's not only dividends to help qualify for more loans, but it's using the Cornerstone rights offering announcement to level up our accounts. So we get the 20% premiums and the 20% dividends, but we pocket those premiums if we play the rights offering properly. And again, that's how you also reset your dividend yield, so you keep your dividend pretty much the same every year. So I don't really worry about my dividends falling during a bear market with Cornerstone, because again, they keep their dividends the same until the next year. Just play that rights offering properly, and that's how you reset your dividend yield. So Yieldmax dividends will fall in a bear market, but Defiance dividends could grow, and Cornerstone will keep its dividends the same. And the fourth way that I plan to keep my income up over $300,000 per year during a bear market is by using the special drip for Cornerstone. So in addition to Cornerstone yielding you 20% and giving you 20% premiums, it drips its dividend down at the bottom for free money every month. So if you go to Cornerstone's chart, you'll see that it has a channel that it goes in. Okay, Cornerstone right here. This channel that it goes in, this 1 year chart, you can see that it moves in these highs and lows. And so if you own it up here at around 8, it's dripping the dividend down here at the lows for free money every month. So you really can't beat Cornerstone, and that's how I keep my yield the same during bear markets. Is if Cornerstone falls, my dividends stay the same, as you know, because they don't cut the dividends, and then they just keep dripping at the bottom. So I'm dollar cost averaging at the lows during bear markets, and also increasing my yield because you increase your gains and you compound that 21% yield when you drip it at the bottom. Okay, so you're always increasing your yield with Cornerstone, once again, as you drip it at the 21% at the NAV. So it's a very special feature, and that's why all of my members are in Cornerstone. Okay, you can go to other brokers for lower maintenance, but they might not have the special drip for Cornerstone, so just be aware of that. And then the last way that I plan to maintain this over 300,000 per year in dividends, even during bear markets, is I just stay indexed. Cornerstone is indexed, Yieldmax is indexed, Defiance is indexed. So as long as I'm using my margin debt on index plays, I don't really worry about market corrections, because the markets don't really fall too bad in any given bear market. Maybe they'll fall 20 to 30%. If we have a crash of over 30%, I always keep my put options on just in case we have a market meltdown. So I can withstand over 30% corrections, and then our dividends keep coming in each month, which act as a buffer to any kind of market correction, and they keep my available withdrawal high. So you would have to have over a 50% correction essentially to take me down. But if we did have over a 50% correction, once again, I always keep my put options on. And if you need help insuring your portfolio with put options like I do, that's in my Volume 5 e-guide. So I stay indexed, and that way I can use my margin and not have too big of drawdowns in my account. And again, stocks fall by much bigger amounts than the indexes. So if I just stay indexed with Cornerstone, Yieldmax, and Defiance, I can use this margin once again safely, and then my dividends pay back my margin. So my leverage goes away. And once again, if we fall worse than 30% or have a 50% crash, then my put options will really clean up in the event of a down market. So if you need more help doing what I'm doing, email me for my e-guides at aikentod48@gmail.com. When you buy my e-guides, you get free access to Discord for life, and you get my phone number for life. So just keep this in mind. When you call me, I can walk you through whatever you have questions on. If you need help negotiating your rates down, if you need help understanding maintenance or how to play Cornerstone, I'm always here for you. So just give me a call. Okay, if you like the video, click like or subscribe, and I'll talk to you soon, everyone. Thanks.